Welcome. Let's see what we got for today. But as usual, we'll start with some post analysis. Let's look at what we got or did yesterday. Yesterday, I was looking for sales on British pound, Japanese yen, below here, which is below the structure. Stop loss here, which is above the structure, and expecting price to come into this zone, which for those who trade Fibonacci and what have you, would be saying that price has dipped to the 72.3 or 70, the 70s percent. Okay, I think somewhere around here would be the 50% or so. This place will be around 61.8 or so, somewhere around here. So I'm just looking at price to dip. Okay, this is the zone of interest. Okay, anywhere around there, price could react. But if this doesn't play out, I don't want to just jump into taking buys because price has tapped this zone here, which is a zone of interest to me. Okay, so if I want to take buy, I would like to see some strong bullish momentum, then retrace before I do what take buys. So for now, I'm on the sellers my sentiment for today is to take sales on GJ, which I have a trade that is active at the moment, has been filled and running. For today, I would allow the trade that is already active to play out. Like I always do, I always go for 1% of my capital at a particular time. I don't go for more than this. Unless it's a different market, how would I put it? Setup, yeah, different setup, whereby I have a bigger setup that is playing out. Then I see an area to take some precision entry. I will take that precision entry, then just whereby the market is aligning, but I will not because it's aligning and giving me different setups. I will now see my account 10% already active in a trade. Oh, no, 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 no. Because if anything goes on, for instance, fundamental or anything, and it spikes, that it will be 2 or 3 or 10% gone like that. So the setup will be, let's assume that I have a long time setup that is 1%. Beautiful. I have a short time setup. I will now enter a short time setup that is also 1%, not two long time setups that are 1%. No. Okay. One long, one short, or one medium, one short. That kind of balancing of the equation there. So this is for GJ. Let's look at gold quickly. Gold was beautiful, but I had an issue with gold yesterday because it didn't give me my setup to take any buys. But the setup for the bullish side played out very well because price dipped into the zone of interest where it was supposed to go up. Beautiful, beautiful. But what I'm talking about is price did not really give me the kind of setup that says, okay, it's time for you to take buys, unless you're looking at it like this. If I look at it like this in hindsight, I would have taken my buys on this candle. That is in hindsight. My stop loss will be safe here or anywhere here. But don't forget, this is hindsight. It's easier to trade in hindsight. But what I was actually looking to get was, let's say this is a structure we had, something of this nature. Something of this nature. It did not break this high, failed to break this high, came back, took out the low, which is this. This high failed to break this high, came back, took out this low. So this is the low that I'll be looking at. So this low is this low here. This is this here. This is this here. Looking at it using the line chart. Okay. So but I did not really get the kind of setup I wanted. What I wanted is to get something like this, show weakness coming down, then voila, bullish to retest the high. But look at where it went to happen. Look at it. It had already tapped the zone, got rejected. Taking any buys, anything from here would be very, very risky. So that is for gold. So to look at what I'm gonna trade this morning, this is what I'm looking at. Price has given me some bearish setup, showing weakness on the bullish side. So I'll be anticipating to take sales to write it down. So this will be my scenario one. Or I take buys above this resistance going up. But don't forget that if you're taking buys, you're buying into a zone. Okay, you're buying into a zone, but not a very strong zone, but still a zone because look at it. It prevented price from pushing up, and here price did not even tap it fully, but it started reacting. Look at the impulsive drop. But this from here to here is sweet range in the sense that there is not going to be any delay or encumbrance stopping price from dipping. But better still, because generally we're in buyer's territory, so I'll be looking for I have a sentiment that is in favor of the buyers. Okay, buyers. Okay, in favor of buys. I think that's better because sometimes when I say the word buyers, it sounds like this, and it mistakes some people because they're. I think it was the name they call it. I think it's homophobe or monophobe. I can't remember. Two words that sound alike. So I'll be looking for potential buys above here. Sweet ones to be above this zone. That will mean that price has really cleared this resistance and supply zone and area of interest where you have people, because the market knows that people will be putting their buy stop above here. It could wake up, retrace before eventually going up. So putting buy stop here won't be the wise step to take at the moment unless you want to keep a very wide stop loss. So this is what I got on gold. The last but not the least is Bitcoin. I was seeing Bitcoin trending yesterday on Twitter. So I believe that Bitcoin did some beautiful thing because whenever it's Bitcoin, you see Bitcoin trending, not that it has pumped. When it's dipping, nobody talks again. Okay, so the market was showing us that it was in favor of buys. Okay, buyers territory. The sales, like the market said, I'm only the voice of the market. That the taking sales will not be wise because we'll be taking sales into this zone, and this is a demand zone. So it's better to take buys. But I was not looking to just rush into taking buys or putting buy stop above here because imagine that we kept buy stop here or here. What you see here is just, how would I put it? Those of you who trade or have an understanding of Wyckoff cycle, trade Wyckoff theory rather, but I tend to call it cycle because it might not repeat picture as in word for word or picture for picture, but at least you have an idea that this is the spring. Okay, this is the spring. Price has done the other things it's supposed to do. This spring is supposed to usher people into knowing that okay, this is, if price goes again, and whenever I see a spring, know that price will want to do a mirror spring. For instance, this is one spring, price did a mirror spring here. If it fails here and comes in, this is the mirror spring. And if it does this, price will want to come down and do this. So, but if it springs up, this is non-conventional. This is not the conventional trading strategy. Okay. Most people might be confused hearing this, but okay, let's put it this simple way. You're in buyer's territory. It's safe to look for buys after you've gotten a spring or bearish breach that returns into your territory. You're in a range from here to here. This is a range. Price gives you a spring. This will be an indication that if price breaks the top, comes back for retrace, is going to go up, because this spring will be like price saying, okay, I want to give a territory that says this is where it started. So if you go to higher time frame, this spring is going to look something like this. Look at it, indicating that this was a territory that breached down but was taken out, indicating that a new territory has been formed here. This is a little advanced. How do I make this easier now? Price made a bearish breach, was taken out by this same guy that made a low, returned. This is the new guy who is in charge of this territory. I know it's a little advanced right now. I know. I'm trying to think of an easier way to put it. Okay, what I'm trying to say is this, that this is the guy who is in charge of the territory now, and price is expected to retest this high. You see, this bullish candle has closed. This is what you call, um, I think, what does my mentor used to call it that time? Pin bar. Here, this is a pin bar, which is an indication that price want to turn bullish. Whenever I see this in a bullish structure, market structure, let's say market structure bullish, it has retraced and you see a pin bar, it's an indication that price wants to do what? Retest the high. This is one of the numerous strategies you have to understand. Okay, the last but not the least is this. Don't forget to subscribe, hit that notification button, which is like a bell somewhere down here. Comment and like. This is all I got for you for now. Shalom, Barak Bashad.